Hey everybody, welcome to the channel. This is Home Loans with Walter, and I am Walter, and this will be your mortgage news update for the week. So this week we're going to be covering three major things that every homeowner should know. So one, we're going to be looking at mortgage rates, where they're headed, and why they just jumped again. And this is all coming from realtor.com. We're also going to be looking at from what's happening with home sales and demand, and that's going to be coming from Wall Street Journal and Zillow. We're going to look at where home prices are forecasted to go, and that's going to be coming from Redfin. And then lastly, we're also going to be looking at the broader market here. We're going to be seeing why gas prices have jumped, or why has it fallen in price as traders are liquidating their positions going into the weekend. And then trust me guys, everything that's happening right now is actually impacting your mortgage rates more than you think. And as always guys, I am your local mortgage expert. Whether you're ready to buy your home or looking to lock in your next real estate investment, I'd love to help guide you through that process. Use the link below to get started. And as always, if you find this kind of content helpful, please don't forget to like and subscribe to stay up to date with the latest real estate mortgage news and real estate updates. So, going into that, we are going to take a look at Mortgage News Daily, seeing what's going on here. We're going to take a look at realtor.com, where mortgage rates increases have taken place. And as always, all the links that I am will be going over will be in the description below as well. All right, guys. So let's start with mortgage rates, just because this is what's driving everything in the housing market, right? So according to Freddie Mac, you can see in the article, the 30-year fixed rate is now at 6.22, up from last week at 6.11, or from 6.11. So that marks a three straight weeks of increase after we briefly dropped below sixes earlier this year. It was a few weeks ago, and that was a good time. So, what caused the mortgage rates to rise again? There's two main factors that we can take from this article. So it's going to be inflation concerns and, surprisingly, global conflict and energy prices. I don't get into politics, but I'm pretty sure you guys have heard of what's going on out there. So right now, oil prices and geopolitical tension they're pushing treasury yields, and it's making mortgage rates follow those. So to break it down simply, when inflation fears goes up, bond yields go up, and so does mortgage rates. Even though rates are rising short term, they're still lower than last year when we were close to like 6.6. I know sometimes we were getting close to touching even sevens, if I recall correctly. Compared to this time, affordability has increased rate wise slightly. So this is a frustrating middle zone for a lot of people. Rates right now aren't amazing, but they're not terrible either. All right, so jumping into demand. You can see here the Wall Street Journal. It's actually reporting that pending home sales have actually risen in February, showing some early signs of buyer activity coming back, but it's not a full recovery as of yet. Pretty sure you can see. And why is it? Just because affordability is still tight. Even though we just saw mortgage rates have came down a little bit, it's still a very small window that a lot of people are able to afford. So even with lower rates than last year, home prices are still high. Monthly payments are still elevated, and a lot of buyers are still cautious. So in fact, overall home sales are still running well below normals, around 4 million annually versus a typical 5 million plus in the market. So what we're seeing is a market is trying to wake up, but it keeps getting held back by rates, as well as home prices being still on the higher side of things. So this is why you're seeing homes sit a little bit longer. Prices are getting reduced, and as well as there's going to be a little bit more negotiations. Now let's talk about where this market is going. According to Zillow's latest forecast, you can see here, home values are expected to grow modest in 2026, not crash, not spike, just steady. This is what I've been telling to clients. We're now in a normalizing market, or at least we're getting close to it. It's not collapsing one. So Zillow is predicting slower price growth, stabilized inventory, and gradual improvement in affordability, which I think so, right? We saw that mortgage rates are still on the lower end, and people are starting to reduce pricing. So that could lead into what everybody else has been wanting. Appreciation from 2020 to 2022 over that time span, it's starting to see that level off, and we're not going to see a housing crash either. So it's going to be more of a balanced market shift. We are looking at Redfin. So Redfin has also been reporting that mortgage rates have been increasing again, and it's happening at a really critical time, right before the spring home buying season. And this matters because spring is when most buyers enter the market. So when rates rise right now, it can show a slowdown in momentum significantly, right? We see mortgage rates come up, and people tend to be a little bit more cautious with their budget. This is why you're seeing that overall push and pull in the market. It's a lot of uncertainty right now, especially going on in the global news. And so buyers jump in when rates dip, and then it starts to maybe not pause quite might not be the right word, but they they take a second to really just think about it, I guess. And then lastly, you guys know I like to cover a little bit of the global market, whether it be crypto, investing, whatever it is. Um, so we're going to be looking at Wall Street Journal again. We're going to look at natural gas falls as traders sell ahead of the weekend. So here's something most people aren't talking about. Global energy markets are impacting your mortgage rates, and with the news that European gas prices are surging due to NLG line distributions. Um, here's why that matters for you. For some of you guys who are like me, I'm in California. You guys have seen some of these prices. Higher energy prices equals higher inflation. Higher inflation leads to higher market interest, and then higher interest leads to higher mortgage payments. So it's all connected. With that being said, let's wrap this up. Here's what we covered today, guys. So mortgage rates are on the rise again, right around that 6.2 area. The housing demand is improving slightly, but it's still fragile. We're coming back to that normal market balance. And home prices are expected to still grow slowly, but there isn't going to be a crash. So, what does any of that mean for you? If you're looking to, if you're buying, timing the rate perfectly is almost impossible in this day. If you're selling, pricing strategically matters more than ever. And if you're refinancing, you need to watch these swings closely. Lock in whenever you get that chance, because you never know when it's gonna pop up. I know the other day it came up like 10 bips or 10 basis points. So if you're looking to help, if you want help breaking down your specific situation, buying, selling, refinancing, or even investing, go ahead and reach out to me. Make sure to like and subscribe, and we'll see you in the next post, guys. Peace.